Reasons, causes, effects of financial crisis 2008. Financial crises in modern history. This crisis, which began in the U.S. housing market, quickly spread to the global financial system in a widespread economic downturn. In this video, we will take a closer look at the causes, effects, and lessons learned from the 2008 financial crisis. Causes. Subprime mortgages. The housing market crash was triggered by a large number of subprime mortgages that were issued to borrowers who were unable to repay the loans. These risky loans were often packaged into complex financial instruments called mortgage-backed securities and sold to investors around the world. Lack of regulation. The crisis was also fueled by a lack of regulation in the financial industry. Banks and investment firms were able to engage in risky practices that put the stability of the financial system at risk. Globalization. The interconnectedness of the global financial system also contributed to the spread of the crisis. When the U.S. housing market began to crumble, it quickly impacted financial institutions around the world. Effects. Bank failures. The 2008 financial crisis resulted in the failure of several major banks and financial institutions, including Lehman Brothers and Bear Stearns. This caused a loss of confidence in the financial system and led to a freeze in lending. Unemployment. The crisis also resulted in a sharp increase in unemployment rates as companies were forced to lay off workers in response to declining demand. Economic downturn. The 2008 financial crisis led to a widespread economic downturn, with many countries experiencing a significant drop in GDP and a decline in consumer spending. Lessons learned. Importance of regulation. The 2008 financial crisis highlighted the importance of regulation in the financial industry to prevent risky practices that could put the stability of the financial system at risk. Global interconnectedness. The crisis also showed the need for a coordinated response by governments and central banks to address global economic challenges. Need for financial literacy. Finally, the 2008 financial crisis underscored the importance of financial literacy for individuals and the need for education to help people understand the complexities of the financial system. Conclusion. The 2008 financial crisis had a profound impact on the global economy and demonstrated the need for stronger regulation, coordination, and financial literacy. While the lessons learned from this crisis will help to prevent future financial crises, it is important to remain vigilant and continue to make improvements to the financial system to ensure its stability.